For more exclusive content from CNBC Crypto Trader, hit the subscribe button now.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
Welcome to this week's edition of Crypto Trader, where our crypto world tour continues. Having just returned from Taiwan, we're back on US soil here at the CNBC studios in San Francisco. This week, we're going to take a look at the blockchain development scene in the heart of the US tech capital. We're going to meet the managers, the funds, the accelerators, the incubators, and of course the hottest projects that the city has to offer. So stay tuned. Over the last number of weeks, Crypto Trader has been to Korea, Consensus, Berlin, New York, Silicon Valley, Taiwan, and now back here to San Fran. I believe it was Mark Twain that wrote that the coldest winter he had ever experienced was a San Francisco summer. For you traders out there, is this the coldest winter you've ever had? Or can you see the summer just over the hill? We're here in San Francisco to talk to some of the hardcore industry veterans, OG fund managers who helped jumpstart the space and have weathered many previous storms. We're meeting with Olaf Carlson-Wee, who founded the vaunted Polychain capital that turned $4 million into over $1 billion. So this is, I take it, home.
Yes, it is. There's really no time horizon. We're really holding forever.
Adam Draper, a legacy and the head of Boost VC. He's famous for seeding Coinbase and nearly 100 other crypto startups. He's always been a Bitcoin maximalist, but now he's setting his sights beyond Bitcoin. Yeah, I love this place, man.
It's pretty fun. The thing that I'm really excited about currently in 2018 are NFT tokens, so non-fungibles.
We'll meet Joey Krug, Chief Investment Officer of Pantera Capital and the co-founder of Origo. Yes, the same Origo that went live just a few days ago. And Tushar Jain, the partner at Multicoin Capital, a respected thinker in the space who's holding tight right through this crypto winter.
So you can see we have some of our great outsider thinker heroes here. Some great old video games in this room as well.
What's this?
So these are snapshots of data from the cartridges of very old video games for the Nintendo Entertainment System. So we've got Legend of Zelda, Mega Man, Super Mario Brothers, and Donkey Kong.
I played Donkey Kong. Olaf Carlson-Wee, Coinbase employee number 1. He wrote his thesis on Bitcoin and was raised in the cold of Minnesota. He also worked as a lumberjack before becoming crypto's original fund manager. So yes, as mentioned, today we do have a very special edition of Crypto Trader with not one, but two of the biggest names in crypto. On my right, I have Laura Shin, who's no stranger to crypto and no stranger to our show. And on my left, Olaf Carlson-Wee, and he's certainly no stranger to crypto or to our show. Olaf, welcome. Laura, welcome. I know we've got a lot to get through today, so I'm going to kick it off and say, Olaf, a lot of our viewers are enamored by what you've done, but we're living through a crypto winter. Now, you mentioned that this is your third crypto winter. Is this the same as the other two, or should we be worried?
I think, it's hard for me to emphasize how much smaller the entire cryptocurrency space was in the last two crypto winters. The narrative at that time was really that cryptocurrency was dead and that this was a flash in the pan and kind of a faded project. I no longer feel like that is the kind of common conception. I feel like people do think this is here to stay. It's just a question of how big is it really.
You're still super confident that we're about to enter this technological era that is going to make an impact on the world bigger than we've ever seen.
Well, I've been saying that and believing it for 7 years now. So I feel like a broken record at this point, but yes.
But you've been vindicated over the last 7 years.
Yes, I think so, mostly.
And how do you manage the expectations of investors or the emotions of investors in a market like this?
So we are very, very transparent upfront with our investors that this is an incredibly volatile market and that we are long-term investors and we encourage them to be long-term investors as well. I think a lot of people think about months or quarters, when we really should be thinking about years and decades, just as far as how big this is and what kind of social and societal effect we'll see over the long term. So when we invest in a new project, the goal is really to have that project become an infrastructural component of the entire internet. The goal is not to make some money this quarter or something like that. This is really when most of the hard work gets done, though. Those of us who are in this for the long term just keep building, and it's with a lot less distraction in a way.
It's, we've been here for about 6 years. I've been here for 6 years.
In this
and Draper University's been here about 6 years.
Now, you spoke about the fact that you guys were the first Bitcoin investment fund, or the first Bitcoin startup fund. Was there ever a time when you thought to yourself, are we the crazy ones? Are we drinking the Kool-Aid?
Always. But the reason that it's a good thing to ask if you're the crazy. I want to be the crazy one. When everyone's focused right now on the price swing of, it's gone down, what, 60%, 70%. We've been through like 6 of these. Like, this is just how Bitcoin and the networks grow. And that's the exciting part, is that we're in the build phase, or the BIDL phase, B-U-I-D-L, of the crypto ecosystem. So have I ever asked myself if I was a crazy one? I know the answer. I am, and I'm okay with it.
You're okay being the crazy one. Do you think that there's a difference between those winters and this winter? Do you still think we're building?
So the way I look at the growth of the ecosystem, yeah, we're building value. We need more people on the network. Like, what needs to happen? So when Brian Armstrong told me 6 years ago that at some point we're going to be on one financial infrastructure, and I bought in, like, that doesn't mean the 20 million people who are on the network today. That means the 6 billion people worldwide. And so how Bitcoin somehow evolves is it grows in these swells. So I look at it more as an orb that breathes, and when it quickly rises, and then it decompresses a little bit and takes a breath. But every time it breathes, it gets a little bigger, and that's how network effects grow. They grow in this way. So that's the difference. The difference is that people believe, and I'm excited about it.
How would you categorize 2017? And this is going to lead up to, what do you see happening for the rest of 2018?
It's really like a media cycle where there's a lot of coverage of this whole asset class and technology, leading to a whole bunch of new users coming into this. The way cryptocurrency grows is massive hype cycles and crashes, and then you end on a plateau that's higher than where you started. That's kind of the story of cryptocurrency.
Is there a risk that the 2017, 2018 correction that we saw has scared away investors to the point where we may not get as many investors into worthwhile projects as we should have got?
That was also very much limited to the US equities markets, whereas this is a global phenomena. So you would expect the order of magnitude to be much higher if we were to see that kind of scale. And in fact, the valuations of all these cryptocurrencies combined is much, much lower than internet stocks.
So in this icy crypto winter, we are checking in with the biggest fund managers to see what they think are the next big things. Let's talk about your investment thesis. What are you guys looking at Pantera Capital?
Yeah, so our investment thesis, at a high level, is basically looking into things that are either enabling new markets or that are disintermediating existing ones.
Give us some examples.
Yeah, so on the new market side, basically, if you look at the crypto space, there's tons of new financial markets being created, even things that you wouldn't consider to be financial markets. So an example of this would be Filecoin creating markets for file storage, or Golem creating computational markets, as well as things that are kind of more in the gambling space, like Funfair or Virtue Poker. So
in that spirit, what kind of tokens are you looking at, or what projects are you looking at specifically?
Yeah, so we looked at decentralized exchanges, so projects like 0x, projects like Kyber, that enable people to trade new tokens once they're issued. We also look at projects like Harbor, which is working on tokenizing existing asset classes so they can be traded on the blockchain. We're also really interested in stablecoins. It's an idea that I'm not sure if it's actually possible, but it should definitely be experimented with and tried.
And there's a lot of talk about stablecoins, and we've actually featured a few stablecoins on our show.
Yeah, so we've also invested in Basis and Fragments, which are 2 other stablecoin projects. I think for those, they have a lower chance of working than Maker, but they're also a lot simpler and more elegant. You may just see something entirely new come about, like people creating, if you look at fiat currencies, they have inflation, it's set by a board of governors, the Fed. I think we may see similar things in crypto, but where it's democratically decided.
What are you excited about investment-wise in 2018? What are the type of things that you're looking at? What are the sectors that you're looking at?
The thing that I'm really excited about currently in 2018 are NFT tokens, so non-fungibles.
So ERC 721s.
The ERC 721 tokens.
Of which we saw CryptoKitties as a good proof of concept last year. Why are you so excited about the ERC 721?
So many reasons. The main one actually being scarcity on the internet. So scarcity on the internet has never been possible. We grew up in a world of infinite internet. Items, whether it's swords or photos or any digital asset, has always had infinite. But what happens when you can give value to products or artwork or illustrations or even books?
So you create this whole virtual reality with scarce items in it.
Yes.
And that excites you.
That very much excites me.
But what can we invest in today to almost do what Olaf's doing?
I personally spend more time focused on underlying protocols that I think will lead to emergent, exciting applications, more than I spend time on trying to figure out what those applications are.
So let's talk about the protocols that excite you.
I think that we are starting perhaps about an 18-month time period where we're going to see all the most exciting launches we've seen since Ethereum. And I think that an appropriate bookend here is the EOS launch at the beginning of June. One is Tezos, which is kind of has a in-blockchain level governance system. By the time this is live, it might actually have launched.
Laura mentioned in a tweet earlier this week that they finally got some good publicity.
Well, I don't know about good publicity, but some balanced reporting.
Yeah, I don't really care about the publicity or the reporting.
About the tech.
Well, yeah, I just think that if it works, that's what matters. And if it can drive an ecosystem, that's what matters. Then you're looking at Cosmos, which is like a cross-blockchain or inter-blockchain communication system. Dfinity has a novel consensus mechanism on-chain governance system, among other things. Filecoin, which we mentioned earlier, is an incentivization layer for a distributed file storage system. And then Polkadot, which is another cross-blockchain communication system. Yeah, a little bit different architecture than Cosmos, but some of the similar goals.
So speaking of undervalued, your 5 best tokens or projects that you would be investing in, that you think are going to win, what are they?
Yeah, I mean, we love Bitcoin. We love anything that has to do with governance is fantastic. So Aragon. Yeah. Anything that has to do with privacy is really exciting. So I would Keep is a very exciting early stage protocol. They're building out a concept that I'm really pumped about. I would say Repio is building a decentralized credit network on the blockchain, and that, I mean, yeah. And then if you look towards the future, I would say a big piece is like virtual reality, the overlapping of virtual reality and cryptocurrencies. So we back Decentraland, and we're really excited about scarcity on the internet. So those would be my long-term perspective. We're taking major investments.
Are there any ERC 721 plays that investors can invest in today? I mean, there was CryptoKitties. Is there anything that investors can actually invest in?
So actually, there are a lot. We backed one that has launched a game called Dark Winds that we're really excited about. A lot of people are just experimenting right now. I just want to see what comes out of this new toy. Real big players are going to start running into this space to launch these smart contracts. And that's going to change the game.
Your thesis on investment in utility tokens today, are you a utility token bull? Are you investing in ICOs, for example, or new utility tokens?
So we are really focused on investing in native tokens of smart contract platforms. Number 2 is I think that there will be a lot of crypto native use cases, things like gaming or prediction markets or like other just things that we don't even know that we want yet. So I'll give you an example. Growing up in the 90s, and I remember we had two really important rules. One was don't meet people from the internet in real life, and two was don't get in strangers' cars, right? But to illustrate how difficult it is to predict what people will build with a technology like the internet, when I leave here, I'm literally going to summon someone from the internet and get in their car. That would have been insane to think about 25, 30 years ago.
We're creating applications that we didn't actually know we needed, or certainly stuff that we couldn't have imagined that we were going to create. Now, we've got a whole lot of these blockchain protocol projects that are coming out there. Do you think we've seen a flood of these? Do you think that we've seen too many come out and that only a few will survive at the end of it?
Yeah, absolutely. You know, we've seen hundreds of those deals here at Pantera, and we've only invested in a handful of them.
Do you think Ethereum is going to be here in 10 years?
Yeah, I think so.
Do you think NEO is going to be here in 10 years?
Definitely much less confidence on that than Ethereum, yeah.
What about EOS?
So EOS is interesting. I think what they've kind of done, in my opinion, is they've toggled the slider between scalability and decentralization.
So is it going to be here in 10 years?
I think it will be, but I don't think it'll have nearly as much usage as other protocols.
What about Cardano?
Same answer. I think it's going to be really hard for something to unseat Ethereum, and I think to do that, you need to be 100 to 1,000x more scalable than Ethereum, and you need to do that before Ethereum gets there. So it's kind of a race right now.
Where have you put your money?
Yeah, so where have we put our money? So Ethereum definitely. Vitalik and the team there are definitely on the forefront of scalability in the space. Also Thunder. I think Elaine Shi is brilliant, but looking at projects like Avalanche, which is kind of another consensus breakthrough that I think is really fascinating.
So write that down. Avalanche, that's probably the one to look at. Which are your favorite protocols today?
So some of my favorite protocols today, of course, Ethereum. I've always thought that Ethereum was a fantastic protocol. And
despite the scaling issues that they have?
Yes. I think that the Ethereum network is one of the most amazing things that humanity has ever actually created.
So Ethereum is one?
Ethereum is one. I'm a big fan of EOS.
Why are you guys such big fans of EOS?
I think EOS is running some really interesting experiments.
What about all this criticism? I mean, do you think that they are decentralized? Do you think that they need to be decentralized?
They are exploring a different place on the trade-off between decentralization and scalability. It reminds me very much of the way that Bitcoiners thought about Ethereum when it launched. There are a lot of things that are enabled here that we just don't even know that we want yet. And for me, the most compelling piece about EOS is the huge design space that it opens up that was just never possible before.
Tushar, thank you very much. I know that crypto may have a short memory, but crypto Twitter doesn't have a short memory. And everything that you've said here, you will be called on crypto Twitter. That's our good friend Tushar Jain, and he really is one of the smartest guys in crypto. Any other promises for 2018? Any other sectors that you're looking at?
The point is to get everyone on the same system.
One network.
One
to create
network.
this big network effect.
And if you think about it in that way, everything's undervalued. Every single project, everything is undervalued. I mean, the main thing I just want the entire ecosystem to do is build. I just want things built. There were promises made in 2017. I want the value of those realized.
So the prevailing sentiment coming from the fund managers seems to be not just to hold, but to build. And if we are in the building phase, then we should look no further than San Francisco for some of the most inspirational projects. We're spanning the streets of San Francisco from downtown to Berkeley, to Oakland, and of course to the heart of Silicon Valley. You'll meet the Stealth Oasis project. You'll meet Reserve, which may be the next big stablecoin. You'll meet the privacy protocol Origo from one of the Valley's first co-working spaces. You'll meet Tari, and you'll meet Dispatch Labs at the Bureau, an exclusive blockchain accelerator out of an old warehouse in the Mission. So after meeting all the fund managers and talking about all the protocols, we're now getting down to the nuts and bolts, the actual building that happens here in San Francisco at a place like this called the Bureau. Guys, what is this place all about?
Companies that are building on our chain and are building on other protocols are testing out their products, meeting with partners, finding out who are the best people to support their growth. Investors are coming here virtually every day. You never know who's going to walk through the door, but it's always someone amazing. It's really just like this focal point of the community where the best and the brightest inevitably find themselves.
Gentlemen, we've now done a huge tour of San Francisco and the Bay Area. We've seen a lot of projects, we've seen a lot of fund managers, but we've also toured Korea, Asia, and China. We get the feeling that Asia may be leading this race. What's your opinion?
I tend to disagree. I think when it comes down to the education and comfortability, with the systems, they might have a little bit of a lead. But at the end of the day, I do feel that there's a lot, especially in San Francisco, great people who are dedicated to building products and actually out there creating real value.
Do you think Asia is winning?
There's this idea that there's a race, and that's kind of how the human mind works, is it's like there has to be a winner, there has to be supremacy. Everybody wins.
So what are some of the more exciting projects coming out of this area?
Yeah, Dispatch Labs, probably the most, no, I'm just kidding. No, we work with a lot of great companies, and I have a buddy over at Trust Token, love what they're doing. Anybody who's trying to democratize wealth, that's key to the original mission of this technology.
Now you're talking about your own chain, and I'm assuming based on your t-shirts that this chain's called Dispatch Labs.
We don't always wear the same t-shirt.
Yeah.
Every other day. Yeah.
What is Dispatch Labs?
So it's a place where you can build ideas. It's a chain that's really, really fast. It has no transaction fees of any kind, and it enables you to control data off the chain and manage those operations on chain.
So you said a lot of things there. Let's talk about really, really fast. How do you achieve real speed? Is it what kind of chain is it? What's the consensus mechanism?
We're taking what's called a gossip layer, which is a part of what a DAG, like what Nano or Raiden or Constellation Labs is doing. And we're layering that over what I call a more traditional architecture. It's only existed for about a year and a half, called delegated proof of stake, which is the fastest current consensus method. That's what EOS or Steemit or BitShares is using. By combining those two technologies, we're able to have a network that's really fast. So we've seen speeds of up to 107,000 transactions a second on our actual testnet. So we've actually seen those speeds. It allows us to have no transaction fees, which is important for some of the use cases, like banking the unbanked or allowing identity service or working with populations that might not have a lot of revenue moving around.
When you talk about no transaction fees, you mean no gas fees? No.
There's no gas, there's no GUI. Now, in order to, Dispatch enables you to store information on something called the Dispatch Artifact Network, which you could think of as like a IPFS layer. So there are costs associated with running a business on Dispatch if you're storing information and running operations.
And you pay those costs in the native token?
In the native token, that's right.
So if our viewers want to get more information, where can they go?
Go to dispatchlabs.io.
So it's dispatchlabs.io if you want to get more information. Gentlemen, thank you. On to the next one we go. Thank you. Thank you. So we're here in Berkeley. You can see the Berkeley Tower behind us, and I've managed to track down Dawn from the Oasis Labs team. Dawn, what a pleasure to come to your office. It looks like we're the first people in this office.
No, thank you so much for visiting us. Yes, we just moved in fairly recently.
You spent a lot of your time in Berkeley. What were you doing in Berkeley?
Yes, I'm a professor at UC Berkeley in the computer science department. I've been a professor there for more than 10 years.
So what is Oasis?
At Oasis, we are building privacy-first cloud computing on blockchains.
Okay, and so you're taking 453.
Yeah, so these will hopefully converge over the course of this week when we've got all the Parity's Web3 APIs ready to talk to storage directly from the gateway, and then, right, does that make sense now?
Yeah, cool.
Privacy first, cloud computing
on blockchains.
Okay, that's a big mouthful. How are you doing this?
We actually have a new architecture design that's very different than our previous solutions. So for example, in Ethereum, currently each node has to do the same computation.
To confirm that if X amount of nodes confirm that the computation is correct, then the computation must be correct.
Yes, yes. So we have a new methods that can help significantly reduce the amount of replicate computation that you need to do, but still at the same time achieve the same level of security.
How do you do that?
We decompose the system into several components. So for example, in blockchain, essentially you need to do several different functions. For example, reaching consensus, and also having storage and having computation. Right now, for today's blockchain systems, usually these functions, they are all bundled together.
Yes.
And this makes it actually very difficult to scale.
Because every computer is doing every function, or every node is doing every function.
Yes, exactly.
So what you're saying is you're breaking up the functions.
So we take a layered approach, and then in this case, certain compute nodes, they can participate in the consensus layer, and certain nodes, they can participate in the computation layer. And this way, we can essentially significantly increase the degree of parallelization, and hence significantly increase the scalability, especially for complex computations.
Okay, now that's scalability. Let's talk about privacy. How do you achieve privacy?
In order to achieve privacy, we combine secure hardware techniques as well as cryptographic techniques.
So you're developing new hardware, open source secure hardware.
Yes.
Wow.
So the overall secure computation can really help be a game changer for the whole community.
Here we came to track down one of the more exciting projects in 2018, a project called Origo. Baron Gong is here with me. Baron, thank you for coming on Crypto Trader.
Thank you.
Baron, what's all the hype about? What's Origo?
Let's put it this way. There are privacy projects like Monero and Zcash. They focus more on the privacy part for transactions on blockchain.
And that's important because some companies don't want details of their payments exposed.
Sure, and also your financial balance, records, and things like that. And there's another space on the application level, which is privacy for smart contracts.
And why that's important is because actually all data on the blockchain is transparent. Everybody can see it.
Yes.
So when we start launching dApps, it means that essentially all the details for all the customers on the dApp would be visible on the blockchain.
Yes, that's the current issue of that. I mean, you're using the benefits of the blockchain, but then you have to sacrifice the data privacy even more.
As for now, for the protocol, you should assume that the encrypted data is always there.
Okay. So you're all about privacy on the blockchain, and specifically not privacy in the transactive layer, which is where Zcash and Monero have transacted, but actually a much broader
Yes. I would say we include private transactions because a lot of the times the outcome of a smart contract or a dApps involves monetary transactions.
Yes.
So it doesn't make sense to just hide the data, but now the money, right? Yes. So we're hiding both.
Now you talk about technology like yours. What is your technology?
So basically, we implement a cryptography method called zero-knowledge proof on top of a smart contract. When it's related to sensitive data, we pack it with something named zero-knowledge proof circuits.
So what zero-knowledge proof does is it actually says somebody who is verified knows the answer.
Yes.
But we're not going to show you the answer, but because the person is verified,
yes,
or the node is verified,
yes,
then you know that it's safe.
Yes.
But we're not going to show you what it is.
Yes.
Now,
exactly.
So you're taking that technology and applying it onto smart contracts.
Yes. As you said, verification is very important for decentralization because everybody has to verify something before they can reach a consensus, right?
We can make change on the protocol stuff.
Okay.
Right.
Cool.
Yeah. Okay.
Okay. Now, zero-knowledge proofs is not a new thing, right? I mean,
yes.
Zero-knowledge proofs, many other projects are doing it.
Yes.
What is unique about the way that you guys are doing it?
Yeah, I mean, there are several pieces in the zero-knowledge proof tech that we're working on to improve. For example, compiling, the compiler. If you want to convert like the general high-level programming language into this kind of zero-knowledge proof circuits, you have to use something like a compiler.
Yes.
Because zero-knowledge proof is run based on circuits. It's very different. If you look at the circuit, it's very different from programming language. But I mean, original smart contract is written in programming languages, right? Yeah. You have to convert these.
So are you simplifying it?
Yeah, we're simplifying that. We're also building a compiler so that developers can actually just convert their programming language into circuits and use it in our protocol.
With all the controversy around Tether, the crypto market is in a panic. And the question remains whether we need a stablecoin, and if so, what does a stablecoin actually look like? I'm here in San Francisco with Nevin Freeman from a new stablecoin called Reserve. Nev, welcome to Crypto Trader.
Thanks.
Do we need a stablecoin?
Yeah, absolutely. I think that not only inside of crypto is a stablecoin highly useful, I think that the ability to have a price-stable cryptocurrency actually sort of makes it so that the crypto technology can be useful in the real world of money in a way that it really hasn't been up until now.
So where does Reserve fit in the scale?
We fit in the middle. So we have a crypto collateral setup.
A crypto collateral setup. Define for me what you mean when you say crypto collateral setup.
Yeah, so our system includes a smart contract that we call the Vault that holds a whole bunch of different crypto assets. So think like Ether, but also tokenized gold, tokenized real estate, et cetera. And then the value that's stored in those assets can be used to implement an automated exchange rate peg. So it's sort of like Tether in a sense, but instead of dollars in a bank account, you have a diversified set of crypto assets held in a smart contract. And so everyone can just look and see that the assets are there. You don't need any sort of audits because it's all transparent. And then the code that implements the exchange rate peg, anyone can read that code and see exactly how it will behave. So there's no question about the counterparty of whether they're going to use the assets to back the peg or not.
Is the ratio between the assets in the vault and the stable coins in circulation always 1-to-1?
In our case, it actually starts off significantly higher than 1-to-1.
So and that's because more dollars in the vault or more assets in the vault than there are in circulation?
Exactly. And that's because those crypto assets are volatile, right? Like that's the whole reason why we need a stable coin in the first place.
And what you're saying is as the asset class matures and we create stability through diversification of assets, you'll be able to issue more and more coins, eventually to a point able to issue more coins than there are in the vault.
Yep, that's right.
Let's talk about Reserve. If I buy the actual stable coin, the Reserve stable coin, I'll never make money on that because that's stable.
That's not the point, yeah.
So if I wanted to invest in a Reserve type structure, how would I invest?
So our secondary token is called the Reserve Share. People who purchase the Reserve Share may not make any money, but the Reserve Share is designed so that if the Reserve token is adopted, it will capture some of the value of the network.
So if I'm a Reserve shareholder, I'll capture the value created by the network. But how is value created in a stable coin network?
Yeah, good question. So essentially, once you get to the point where a token is used as a means of exchange, there's a very strong network effect there. And in fact, the network effect on a means of exchange is much, much stronger than the network effect on a store of value. Because with the means of exchange, it's only useful if everybody else is using it.
That's
with the store of value, you just care about the risk and reward and the liquidity.
Are we going back to old principles of the gold standard, where currency used to be backed by gold to a certain ratio?
It's a little bit like that. It's a little bit like starting on the gold standard and then going off of it over time. But you have to really look at a lot of currency peg attempts in other parts of the world, in places where you don't have a huge, strong economy necessarily, where you have a middle-income country that's pegging its currency to the dollar or to the euro in order to really understand how currency pegs work and how to make sure they don't fail. And so outside of crypto, basically at this point, there are about 16 countries in the world that have 20% or higher inflation. And that's a really big deal. That's like people paying like a 20% or higher tax on all of their...
Give me some of these countries.
So Argentina, Zimbabwe, Venezuela is like the most extreme case right now where they're in a hyperinflationary situation. And people in those countries in some cases have tried to use Bitcoin as a way out of that situation, but sometimes Bitcoin is too volatile.
Well, Bitcoin's gone from 20,000 to 5,000. So.
Right. Which, if you're in Venezuela, maybe is still better. But in a lot of these circumstances, it's really not better.
So what's the rollout plan?
So for people in these markets, essentially what we want to offer them is a stable store of value, notably not a means of exchange at the beginning, just a stable store of value on their phone. Right? So a lot of these people in these countries either don't have the option of using a bank account because they don't have a government ID number and so they can't get a bank account, or they simply don't trust their banking institutions.
We're on the streets of San Francisco walking towards the exclusive Battery Club where we're meeting Paul Walsh from an exciting new project called Metacert. Let's go take a look.
Hi, Ron.
Hey Paul, how you doing?
Good to see you.
Paul, this is an amazing club. Thank you for bringing us here. What's all the hype about around Metacert?
Cybersecurity is one of the biggest challenges in the blockchain world and the cryptocurrency world, and we're solving a lot of problems in the crypto world right now. So basically, in short, we're protecting people's crypto by making sure they don't open the wrong link and send crypto to the wrong address.
Okay, that sounds fancy, but how exactly does it work?
The crypto companies install our software inside the platforms that they use for building their communities. So typically Slack and Telegram. So when you're exchanging messages, it's in the background checking Metacert to see if it's a safe link or not. But then also, more recently, we're getting integrations with wallets like the Coolbit wallet. So when you go to send cryptocurrency, it quickly checks the Metacert protocol to see if the address you're going to send to is verified or classified as fraudulent, as phishing.
So is Metacert a total protection layer against phishing scams, against fraudulent scams, etc.?
Think of us as the very sign for crypto. We're an infrastructure company. We're an infrastructure security company adding a new layer to the blockchain world. Because right now it's raw, it's new, and the biggest problem is cybersecurity. So if we want mass adoption in the blockchain world and crypto, we need to have that security. We need people to feel safe and secure that their crypto is not going to be stolen.
So the only way that you can protect me or protect anyone against phishing attacks, fraudulent websites, fraudulent addresses is if you have a good source of data.
Yep.
Where do you get your data from?
Well, we own what's called the biggest threat intelligence system, which is a fancy word for classified web links. And we've been crawling and classifying for a number of years now. It's bigger than McAfee, Norton, and Kaspersky combined. But we also have people around the world reporting malicious links to us and then experts validating those links. So we already have people actually volunteer and work for us.
So no more phishing scams, no more?
No more. You know, in 2017, actually, phishing was a big problem in Slack. Do you read about it today? No, because we were installed in so many communities around the world that it was literally like turning off a tap. And now on Telegram, it's 500,000 people, no, 550,000 people being protected on Telegram in crypto communities using our software. But really those applications are just applications of the protocol. It's just a customer of the protocol.
That protocol is going to be used to protect the entire crypto ecosystem, but also any ecosystem that needs protecting.
I see it as the new security protocol for the internet. So a Wi-Fi hotspot provider, ISP, a hardware wallet, an exchange, a software application developer, a browser, anything that provides access to the internet. If you want to check to see if that link is safe or not, check the Metacert protocol.
Now, if you've been following our show, you'll know that ERC 721 tokens, or non-fungible tokens, are all the rage at the moment. Atari is developing a blockchain which is all about non-fungible tokens. Naveen Jain's with me. Naveen, nice to have you on Crypto Trader.
Thanks for having us.
So what exactly is Tari?
Tari is a digital assets focused protocol that's being built on top of Monero.
Built on top of Monero and a digital assets focused protocol. What do you mean by digital asset focused protocol?
So the purpose of the protocol is specifically for non-fungible tokens, specifically programmable non-fungible tokens.
Okay, now why not just use Ethereum and use the ERC 721 token?
So the challenge with decentralized application systems like Ethereum and others is that there are a lot of complex technical trade-offs that you have to make when you're building a decentralized application system.
So I want to get into the detail of how it works, but before we get there, what do you mean merged with Monero?
So it's a merge mine sidechain with Monero. So the idea is we're leveraging the Monero security model. So we don't have to go and recruit our own miners. We can actually collaborate with the Monero community to make sure that the Tari blockchain is secure.
So is a miner that's mining Monero automatically going to be mining Tari?
Effectively, yes. Assuming Monero pools decide to support Tari, the basic answer to your question is yes.
Okay, now let's talk about the actual blockchain. What do you mean by managing digital assets? How does it work? What are the use cases?
So the idea is that digital asset issuers, so first of all, what is a digital asset? So digital assets are things like loyalty points, virtual goods in video games, live event concert tickets, crypto native assets like things like CryptoKitties. All these sorts of things are what we classify as digital assets.
All non-fungible digital assets.
These are all non-fungible digital assets. So the idea behind Tari is to build a blockchain that supports these sorts of digital assets specifically and exclusively.
Now let's talk about the real world applications. Let's talk about how we could use this blockchain in the real world. Give me an example around, say, ticketing.
So the idea behind digital asset issuers and the challenges they have is they all want to set rules around their digital assets. So for example, in the ticketing use case, the original economic participants in the sale of a ticket, so the venue, the promoter, the artist or team, don't get to participate when their tickets are resold. So the idea would be, an idea could be that they could use something like Tari to issue their tickets on a blockchain system, in this case Tari.
And make the whole ticket programmable that says that every time it changes hands, they get a cut of the ticket.
Totally. So that's one example of a rule set that they could, a rule that they could set in terms of their digital asset on top.
Let's talk about some other rules that they could set.
Yeah, so for example, another challenge in the ticketing space is when you have tickets that are sold on the secondary market.
Theoretically, an artist can create a piece of art, and every time that piece of art is traded, if it trades with a certificate or a token backing it, then the artist can benefit from every resale.
Absolutely. Or if you're a video game publisher and you have a very carefully orchestrated set of game mechanics around your in-game items, you could say, only this type of item can only be sold to people who have this certain level of achievement in the game, or whatever rule you want to set.
Baron, when can we expect some kind of testnet or working product from you guys?
Sure. We've already finished a POC internally. Officially, we're stating that it's not until December that we're going to release our testnet. But let's see, we're actually ahead of schedule.
I smile because most projects that I speak to are actually behind schedule.
Yes.
Yeah. Don, when can we expect a testnet?
So we actually do plan to launch a private testnet very, very soon. And we actually want to welcome developers to join.
So Nev, is this just a theoretical white paper, or have you actually written code and smart contracts to do this?
Yeah. Our code is actually live on the Robson testnet on Ethereum. We are going to be doing a sort of public release of that at some point. At this point, only our developers have access to that testnet.
Baron, you guys raised some capital recently. How much money did you raise?
Our hard cap is $30 million US.
And have you raised the full 30 million?
For the private sale, yes. We do have a small portion reserved for public sale, which is coming in the next month.
In the next month?
Yeah, that's going to be around 1.5 million or 2, yeah.
There are some big names that have been backing you guys.
Yes.
Which is really what sent us here. We heard that there were a whole lot of big names backing you guys.
And from the US side, we have Polychain Capital. And from Asia, we have FBG, the #1 crypto fund in Asia. We have some best funds from Europe as well, 1KX.
1KX, a very well-known fund.
And also Signum, Kinetic from Asia. We have a lot of exposure in Asia.
This whole project sounds like a game changer. It sounds like a very ambitious project. How has it been accepted by the investment community?
Oh, it's been great. We have really top-of-the-line investors.
Can you name some of your investors?
Right, from A60 crypto funds, from Accel, from Polychain, Metastable, and BINANCE, just you name it, and also BitMate.
Sounds super exciting. Did you guys do a public sale, or was it only private raising?
So far, we've done a private token pre-sale.
And is there any plan to do a public sale?
Right now, we are just focused on private token pre-sale.
Nev, is there appetite for this kind of investment?
I would say so. At this point, we're backed by Coinbase, Peter Thiel, Sam Altman, GSR, Distributed Global, and about 40 other crypto influencers and funds in the space.
Okay, now we wouldn't be here if you weren't doing a token sale.
Correct.
So what is your token going to be used for?
Well, if you take this hardware wallet as an example, in the next few weeks, Metacert protocol will be baked in. When you go to send crypto to buy crypto in an ICO or a token launch, it will quickly check to see Metacert protocol to see if it's safe or not. If it's been verified, you'll get a green shield inside the application. If it's fraudulent, you get a red shield. If it's being investigated for fraud, you get an amber shield. But in order to get the green shield, as a company, you'll need to come to Metacert and pay us in tokens. And then the community that does the actual verification work gets paid in tokens. And that's why we need a token.
So it sounds super exciting. Where are you in the development process?
So we're a very early stage project. So we're collaborating with the nascent Tari community now on sort of the underpinnings of how Tari is going to actually work. And then one of the things we're working on is one of the first use cases for Tari, which we'll talk about later.
So you're not going to mention it on our show?
We're not mentioning it today.
Did you guys raise money?
We did raise money entirely privately from accredited investors.
And when can we expect a Tari launch?
So you can expect to hear more about the first application from Tari later this year, and ideally a testnet, or hopefully a testnet, at some point next year.
Naveen, always good to see you, my friend. Thank you very much.
Thank you so much for having us.
And if people want to invest in a stablecoin and say they want to invest in Reserve, can the public buy shares in Reserve?
Not at this point. We've done only a private pre-sale for accredited investors. We want to make sure to be very legally conservative because we don't want to add any risk to the project not working. But we certainly want to make the token available as widely as we can as soon as that's legally feasible.
Well, Nev, good luck. You've certainly taken on the biggest task in crypto and the most complicated task in crypto. I wish you all the best, and we'll stay in touch with you.
Okay, great.
Thank you very much.
Thanks.
Got you. And how much money are you raising?
We're looking to raise between $10 and $15 million.
So, Paul, when does your token sale start?
It's underway right now.
Okay, so you're in the middle of a token sale.
Yep, just started.
And if our viewers want to get more information and maybe even participate in the token sale, where can they go?
Metacertprotocol.com.
That's metacertprotocol.com. These guys sound like they're really protecting the cryptonet. And is there a date that you're going to open the token sale?
We are thinking about somewhere in late July. So stay tuned and join the whitelist first, and then get the surprise.
Well, that's it. Stay tuned. Go to origo.network, get onto that whitelist, and maybe you'll get some tokens on the day. And if our viewers do want more information, where can they go?
And they can go to our website, oasislabs.com.
So I finally managed to track down the Oasis team. I'm here in Berkeley with them. And if you want more information, go to oasislabs.com. And just a reminder that if you are watching us on YouTube and you do want more information, hit the subscribe button now. As the SEC ponders regulation, we ask whether San Francisco and Silicon Valley will lead the blockchain revolution. Something to think about as we head back to Asia for Korea Blockchain Week. Until then, I'm on Twitter at CryptoManRun, and you should trade well, my friends.
Crypto Trader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.